But you have access to, in your self-directed IRA, things like the options market, the futures market, the foreign exchange market. Those assets have leverage.
Al, as we get into this next segment here, we're talking a lot about retirement accounts, retirement techniques and strategies. But with these great markets, they're soaring right now. A lot of people's 401ks and IRAs are not keeping up with that. They're not keeping pace. So what might be happening with 401ks? What are some of the pitfalls, some of the perks with having these different retirement accounts and maybe making better decisions in there?
Yeah, well, there's a couple of things there that impact the returns of 401ks. And we talk about this all the time. One are fees. That's sort of like having a hole in a wealth bucket and a retirement bucket with money just leaking out on a regular basis, kind of being sucked out of your retirement accounts. And that's something that you can control in a way. When you have a 401k or 403b, there are probably some things within those portfolios that have lower fees that you want to identify. And part of the problem is that people really don't know much about their 401ks.
That's true.
They're put together when you go to work for a company. They tell you that here's one of the benefits that we will provide for you. It's a 401k. We'll take part of your paycheck and it will go to the plan sponsor who will put it into investments that who chooses. Oh, that's right. That's you. And you pay them a fee for that. But you're really making the decisions within those accounts. And the problem is without the right education, without the right counseling, people really don't have a good idea of which of those choices they should be in and which of those choices maybe they want to rotate out of into something else. Because you have available to you primarily mutual funds, maybe some exchange-traded funds, maybe some of you can trade stocks, but the majority of you are in mutual funds. And not all of the mutual funds are looking at the same components or the same part of the market, although most of them really just kind of strive to mimic the S&P 500. But there are some that are going to perform better during certain market conditions and some that will perform at a lower rate during certain market conditions. So paying attention to those, understanding what you have is important, knowing that you can rotate out of something into something else. You can manage whatever it is in those retirement accounts, in your employer-sponsored retirement account. And in these classes, we do go over what we call 401k, dynamic 401k management, helping you to have a better idea of how to have the opportunity for better returns in those accounts. Now, what a lot of people do, Josh, and here's the big, probably the best feature of a 401k is the company match. If your company is matching part of what you put into those retirement accounts, that's free money, and that's something you need to take advantage of. But the emphasis is on putting as much money as possible into those employer-sponsored retirement plans, even beyond the match. This is one of the things that some of our students do. It's something maybe to consider, and that is setting up a self-directed IRA. One of the benefits there is that you don't have the fees. There's no management fee there because you're managing your own assets. But the other advantage is that you have many more choices. In a typical employer-sponsored retirement plan, what direction does the market have to go before you have an opportunity to benefit?
That has to go up.
It has to go up. And the market doesn't always go up. Sometimes it goes down. Sometimes it goes sideways. So you are only participating or only have the opportunity to participate in one out of three directions. In a self-directed IRA, you have access to strategies that can benefit not only in an up market, but have the opportunity to benefit in a down market and a sideways market. The other thing that is available in a self-directed account is something that you can't do in a typical 401k, and that is using leveraged assets. Now, the institutions are doing that. Why do the institutions use something that they don't put you in? They put you into mutual funds typically, maybe some stock, but that's not what they do with their money. I mean, they certainly do have stock portfolios. You're not going to find a professional out there, a professional trader that is using mutual funds. But you have access to, in your self-directed IRA, things like the options market, the futures market, the foreign exchange market. Those assets have leverage, and that can be maybe anywhere from 10 to 1 to over 100 to 1, which means that that every dollar that you are using in an investment can control a much larger amount of that investment. It's sort of like a mortgage on a home. We reference this all the time, but people don't have to go into a house if they want to buy it with $400,000-$500,000 in cash, plop it down, and own the house. They can take out a mortgage. Maybe it's a $40,000 mortgage for a $400,000 house. That is leverage, and you can do the same thing with the financial markets in a self-directed retirement account.
Yeah, I don't think a lot of people really know that you have that opportunity to do is use the leverage, really get more bang for your buck, or you're more capital efficient, and that's what you should be doing in your retirement accounts. I mean, a lot of people don't have enough. Okay, use the proper leverage to leverage yourself into these positions and just have better opportunities and more options. There's a little trailer for you, Al, options in your retirement accounts. Now, Al, you were mentioning a lot about leverage. I want to dissect that a little bit more because with the stock market at all-time highs, if people are investing in stocks, it is very expensive. Prices are high. If you say you want to buy Apple, that's at about $123 a share right now. Say you want to buy 1,000 shares of that, or do you want to buy more than that?
Even 100 shares, that's $12,000.
Yeah, you have to have that capital in your account.
Right.
Talk more about options on how to utilize this leverage, especially when you self-direct. You have more control of that and more opportunity, but you can essentially buy there's techniques to, that especially the institutions, they're using this to buy these stocks at a discount.
Yeah, options are used for a couple of reasons. One is to provide protection, and that's really critical. When you go into retirement, if you've worked maybe 30, 40 years, you've put money into your retirement accounts, into your wealth bucket, the last thing you can do is have the market take a big chunk of that away and then have to wait maybe 10 or 15 or 20 years just to get back to what you had before. So protection is huge. But the other reason that the pros use options is that it really maximizes the value of their dollars. And for people that might have smaller accounts or maybe in retirement that don't want to take a large amount of your retirement money and put it into, say, the stock market or another part of the market.
Well, it's important to keep some in cash, right?
You need to keep some in cash. Yeah, there's different buckets that you go into when you're in retirement. One certainly is that cash or cash equivalent. But with options, you can take a smaller amount of money and control a larger number of shares of something. So, and there are different options. Are called options because there are different options that are available. But some of the things that you can do in addition to protection would be to control a larger number of shares for a smaller amount of money. And then also the return. If you look at the return of, say, a stock, if you have an option on a stock and that stock is up 10%, kind of a rule of thumb is that the option will be up maybe 100% or more.
That's because you're utilizing that leverage, right?
You're utilizing leverage. You can identify 100% what the risk would be with potentially unlimited reward. So there's a lot of different things that you can do with options, but you need to know how they function. You need to know how they work and what the things that are specific to each of those assets are before you try to use them. And a lot of people, right when we said the word option, I'm sure cringed a bit and thought, well, I'm not going to do that. That's too risky. Options really were designed as a protective vehicle. And if used risky, properly, they can do it. Not doing anything.
Not doing anything or just putting all your money in the market with no regard to whether it goes up or down. That's what people are doing in their retirement accounts.
Correct.
And that's why it's important that you mention there, knowing what your risk is, knowing what your reward or your potential reward is, even before you get into these investments.
Yeah. Yeah, and that's a good point. The other thing, I started talking about understanding how the market functioned in that first segment. And here's the bottom line is that everything you need to know is on a chart. The good, the bad, the ugly, and the fantastic is already in current price. And what's important then is identifying where that price is going to change. Because you think about it, if you make an investment in something, whether you are building your assets for retirement or whether you're in retirement, you make an investment, what do you want the price to do? Do you want it just to stay where it is and not move? No, of course not. You want it to move, and you want it to move in your direction. But you have to be able to identify then in advance where that potential move will take place. So that's a strategy that you need to have, that you utilize, that you follow. That's the process that you don't deviate from. And for our students, it's core strategy. That is a strategy that identifies with a high degree of accuracy where price will turn or move.
Basically, it's a strategy that's designed to teach you to make better investing decisions. And price is that number one thing that you need to understand. Where price is, but also where to get in that price, where to get out, where you find that as a price chart. And that's where, with the core strategy, it's teaching you how to read that price chart. It's essentially like a story. Once you can understand how to read a story, you can determine what happens next, a higher probabilities. That's what you're hoping for anyway.
Right.
So with proper entry points and exit points in the markets and retirement accounts, that brings more confidence to people going into retirement. So Al, coming up next, we're going to get into futures and Forex and why the smart money, the institutions, use those to create income. These are also available to us. We'll be right back.